The core principles of the infinite banking concept, or IBC, and this is a Canadian perspective. Managing your finances in today's world means that it's more than just saving money. It's about creating a system that gives you control over your wealth now and for future generations. Hi, my name is Laurent Munier, and I'm a partner here at Safe Pacific Financial, where we've been helping incorporated Canadian business owners and their families to grow their wealth and grow their business using strategies like infinite banking. And we've been doing this for more than 10 years. The infinite banking concept, or IBC, was really pioneered by Nelson Nash, and it's a powerful strategy that allows individuals to become their own bank or take control of their financial future while avoiding the high fees and restrictions that are imposed by traditional banks. So Nelson Nash's 5 core principles of the infinite banking concept lays the foundation for financial independence, long-term wealth creation, and multi-generational legacy building. And these principles, they go beyond traditional banking and investing, and they promote self-reliant stewardship and financial integrity. For Canadians that are looking to break free from traditional financial systems and create a private, tax-efficient banking kind of structure, infinite banking offers a unique and strategic approach to managing their money. So number 1, think long-term, build wealth across generations. So Nelson Nash had a background as a forester, actually, and that's shaped his philosophy on long-range thinking. So he often said, plan as if you're going to live forever and live as if today's your last day. So this principle is about playing the long game. Most people, they think in short-term financial cycles, so paycheck to paycheck, month to month, year to year. But really, true wealth is built over decades, not months. Infinite banking encourages that generational mindset. And it's not just about financial security for you, but it's financial security for your children, for your grandchildren, for their children, and beyond. And creating your own private banking system that ensures your wealth remains in the family rather than being drained by taxes, fees, and other financial institutions. Canada's rising tax rate and Canada's inflation makes long-term wealth preservation more critical today than ever. So for an example here, many high net worth Canadians use permanent whole life insurance policies to pass down generational wealth tax-free through their business through what's called a capital dividend account, or a CDA. And so this allows assets to be transferred without probate, without the heavy tax burden, and it keeps more money in your family and sends less money to Ottawa. By adopting this kind of long-term perspective, you're not just building wealth for today, but you're securing a financial foundation for the next generation and the next generation and the next generation. Another founding principle that he's talked about is don't be afraid to capitalize. Your wealth needs a strong foundation. So one of the biggest misconceptions that people have about infinite banking is that they don't want to tie up their money in life insurance premium. And I get that, right? But as Nelson Nash explains, you must be willing to capitalize your system before you can reap the benefits. So if you think about it as farming, you need to plant the seed and you need to let the seed grow before you harvest the crop. So the premiums that you deposit into your whole life insurance policy, don't look at those as an expense. Those are the seeds and the investment that you're planting for your financial independence. And you want your cash value to grow over time. You want it to grow tax-free. So instead of paying high interest to banks when you borrow, you can use your policy to finance your own needs. So you can actually borrow from the insurance company instead of banks. Some minor adjustments to the way he talks about it in the US versus Canada. In the US, if you do the Nelson Nash infinite banking, like by the book, you would only ever borrow from the insurance company through what's called a policy loan, because those policy loans in the US are tax-free all the time. In Canada, your policy loans are sometimes tax-free, sometimes not. So any amount that you borrow that's below your adjusted cost base is tax-free as far as policy loans are concerned. Anything that you borrow above your adjusted cost base is taxable. And your adjusted cost base changes over time. So it's eventually going to grind down to near zero. So your policy loans are going to become taxable in the future. And so we stray a little bit from the pure infinite banking in Canada because we kind of have to, because our rules are not set up the same as theirs. And then there's ways around this taxability of the policy loans in the future. And generally, when you're working with us, eventually you will end up working with a bank. Another thing too is you're building a strong capital base here. So this ensures that your financial system is self-sustaining. So you want to put lots of premium payments in. This allows your policies to be self-sustaining, and it gives you access to this liquidity with way more flexibility. So for an example here, many business owners use a concept called immediate financing arrangement, or an IFA, which leverages a whole life insurance policy. So they borrow against the cash value, but it keeps the policy intact. So it allows their money to work in more than one place at a time. The money's growing inside the policy, and then you've borrowed and you're using it to invest in your business or into something else, and hopefully it's growing over here too. So you're kind of growing your money in two different places at once. Here we call this stacking investments. So this strategy, this allows liquidity for your business expansion. It also gives long-term tax advantages. So infinite banking works best when the policy is properly capitalized. Treat it like your own bank. So you want to put as much money into it as possible so that it becomes as big and as flexible as possible. A big concept with infinite banking is the concept of be an honest banker, right? Pay yourself back. So Nelson Nash frequently used the analogy of not stealing the peas. If you read the book, he talks about, if you owned a grocery store, yes, technically you could take something off the shelf and take it home and eat it, but then you're depleting the grocery store. And what you should do is treat yourself as a customer of the grocery store, and you should pay for the things that you take out. In the same way, you don't want to steal the peas from your own policy. So when you borrow against your policy's cash values, you must have a plan to repay yourself, just like you would with a traditional loan to somebody else. So this principle is really about financial integrity and discipline. So if you take money from your infinite banking system without repaying it, you're actually weakening the foundation of your financial future. Infinite banking isn't just about borrowing money. It's about creating this self-sustaining financial system. So when you borrow against your policy, you want to commit to paying it back. And ideally, he calls it paying it back with interest. So this ensures that your system remains profitable for the very, very long term and generationally. By treating your personal banking system here with that same responsibility as you would if it was a traditional bank, you build this asset that continues to grow over time. So let me give you an example here. Many investors in Canada use policy loans to finance real estate. This lets them access capital without triggering any taxable events. The key to success is repaying the loan so that the policy continues to grow while providing that financial flexibility. So you want to borrow the money, repay it so that you can borrow it again, so that you can repay it again, so you can borrow it again. The infinite banking concept, it's a disciplined system, and it rewards those who treat it with care and commitment. Now, I'm going to talk about this fourth principle, which is stop doing business with outside banks and take back control of your money. But this is where infinite banking in the United States is very different than infinite banking in Canada. And this is Nelson Nash's fourth principle. It's eliminating dependency on traditional banks and financial institutions. Banks make their money by lending out your deposit and charging interest for that. And he talks about, well, what if you are the one that's earning that interest instead? So instead of financing, say, your car or a real estate or a business through a traditional bank, use your own infinite banking policy. This allows you to avoid paying interest and unnecessary bank fees. It allows you to structure your finances in a way that keeps control with you versus an outside bank. But in Canada, you can sort of do that, but you can't do it forever. And here's the reason why, is I just talked about it a little bit earlier where we were talking about policy loans. And this is what Nelson Nash is saying. He's saying use policy loans. Don't go take the policy to a bank. But those policy loans in Canada do become taxable eventually once your loan amount becomes greater than your adjusted cost base. And that is going to happen sometime in the future as your adjusted cost base keeps going down. So I do agree with the sentiment of this fourth point by Nelson Nash here. In Canada, because the treatment of these policy loans and the way that their tax is different, usually what we do with our clients is we'll give them options, right? You have a lot of flexibility in what you can do here. At the beginning stages of using these policies, generally use the policy loans. Later, you're going to want to take the policy to a bank and then borrow from a bank just to avoid the taxability, because Nelson Nash wants you not to pay interest. But in this case, paying taxes is actually way more expensive than paying the interest. The interest from the bank is way lower than paying the CRA. And then the fifth principle, it's to rethink your thinking, right? So challenge traditional financial advice. So the final principle of rethink your thinking is about breaking free from the conventional financial mindset. Most Canadians are conditioned to believe banks, RRSPs, and mutual funds are the only way to save for the future. But these systems are designed to benefit the financial system and those institutions, and they're a little bit designed to benefit you. But infinite banking encourages financial literacy and independent thinking. You're challenging the traditional investment model, and you're looking at strategies that put you in control and that put you first. So the policy that we set up for you doing this, it's not just insurance. It's an evolving and living asset that provides liquidity, security, and long-term wealth building potential. As an example here, the traditional retirement model here in Canada, it relies heavily on RRSPs. However, when you take money out of an RRSP, it's taxed. And it's subject along the way to market volatility, right? Because RRSPs are usually invested in the market and the market goes up and down. Meanwhile, infinite banking allows tax-free growth inside the policy, allows access to capital at any time, and allows a tax-efficient wealth transfer without the risk of government policy changes affecting your future. So this true financial success comes from breaking free of this kind of like outdated financial habit and outdated financial models, and looking at new ways of thinking. You'll find actually, if you just Google infinite banking, or if you look on YouTube for infinite banking, you're going to find a ton of traditional financial advisors, a ton of bank type of people, or a ton of traditional investment people really, really hate infinite banking. And they think it's really, really bad because it doesn't play to them. It doesn't tell you, the client or the Canadian, to go to them and give them all your money. This puts more control in your hands. And it's outside of the traditional financial planning box. We get flack for infinite banking all the time. I do it myself. The people in our company do it. I've got multiple policies of this, right? Like, you can give me flack about this all day. I'm still doing it. So some final thoughts here. Nelson Nash's 5 principles are more than just financial guidelines. They represent like a real shift in how to manage your money, how to manage your future, and how to think about generational legacy, right? You want to think long-term. Think about multi-generational wealth. You want to capitalize your systems. You want to put the money in first. You want a strong foundation before you start using it. So if you think of planting the seed, you want to let it grow before you try to harvest the crop. You don't plant the seed today and cut it down tomorrow. You need to let it grow. You want to be an honest banker. So as you're taking these loans, you want to repay yourself. And this makes you the honest banker, but it adds a layer of discipline into your financial life. Number 4, it's great for the US, not so great for Canada, but he talks about stop doing business with outside banks. And I totally get it. I would love to do that, but it doesn't work like that in Canada. But you want to take control back for yourself as much as possible. And then the last bit of rethink your thinking, right? So challenge traditional financial advice. Traditional financial advice has not changed a lot in the last 40 years, but the whole world has changed a lot in the last 40 years. So some of the things that might have been great in the 1980s or 1990s or early 2000s, we're in a different world right now. So maybe challenge those things. If they still work, do them. If they don't work, get rid of them. And then by applying these 5 principles, you really do take control of your financial destiny, and it really does ensure financial security for yourself and financial security for your family. So now, if you want to learn more about infinite banking and does it work for you, there's a few things. Number 1, you want to work with an authorized practitioner. So at Safe Pacific, we are authorized by the Nelson Nash Institute to talk about infinite banking. We're trained by them. We talk to them often. You'll see other financial advisors who've maybe like heard of this concept and tell you that they can do it. If they're not authorized by the Nelson Nash Institute, stay away from them. The way you find out if they're authorized, you go on the infinitebanking.org website and you can look for authorized practitioners, and you can see that Safe Pacific is listed in there as one of the few Canadian companies that offer infinite banking. Now, if you want to do this with us, go to our website, we're safepacific.com. There's a contact form on there. You can search for infinite banking on our website. We have tons of articles and tons of videos on tons of blogs about it. You can read about it for hours and hours and hours on our website. And then when you have done your own research and if you find that this is something that you do want to do, send us a message. Any message that you send to us through the website, somebody from the team is going to reply to you within 24 hours to book a meeting during business days. And then we'll set up a meeting. We can work with you across the country. Only in Canada, where we can't work with you if you're watching from the United States. There's plenty of people in the US that can help you with that, but we work with Canadians. And then if you got some value from today, if you really liked it, please do those things that the algorithm loves. That means hit the like button, hit the share button, leave a comment below, subscribe to the channel if you're not already. And that'll help this video spread to more people like you, because it is hard to get this message out about alternative financial advice in such an ocean of financial information that's out here on YouTube. So like, comment, subscribe, all those things, and I will see you next time.